डेढ़ वाले कुछ नहीं करा।
So should we start or wait for another 5 minutes? एक बार अनाउंस कर दो कि we'll wait for 5 minutes more and then do it.
Good afternoon, everyone. We'll just wait for another 5 minutes and we'll begin the webinar.
प्रांजल, अजय जी का कैमरा और वो माइक दोनों डिसेबल किया हुआ पूरा। कौन देख रही है?
Yeah, I've changed it, sir. I've changed it.
अजय जी is joining. पर एक सेपरेट स्पीकर्स का और वो अलग अलग नहीं है क्या तुम्हारे इसमें?
तो टीम्स में वेबिनार में ऐसे ही रहता है इसका।
नहीं नहीं नहीं, नहीं होता है, तो बाकी भी अटेंड करते हैं तो होता है। तुम लोग एक्सप्लोर करो।
We'll start, sir.
चलो।
Good afternoon, everyone, and welcome to this webinar on natural gas sourcing by gas-based power plants. I, Pranjal Agarwal, is honored to be here as your host for today's webinar organized by Indian Gas Exchange. As you all may be kindly aware that IGX is the first authorized gas exchange approved by Honorable PNGRB. Since its inception, IGX has enabled efficient and competitive discovery of gas prices along with maintaining market integrity. In last 4.5 years, IGX traded more than 19 crore MMBTUs, and this wouldn't have been possible without the support and trust of Honorable PNGRB, ministries, member, clients, and other stakeholders. It's our constant endeavor to maintain the market connect and keep on innovating and introducing the contracts as per market requirements. We have taken this initiative of organizing this webinar particularly with a view to give a platform within this where the industry can share their ideas, discuss their concern openly, and effectively contribute to the development of gas sector. IGX platform in the last 1.5 years has enabled sellers and buyers to efficiently manage their natural gas portfolio, as we are providing 21 delivery points across India and wide range of contracts ranging from intraday, day ahead, daily, weekday, weekly, fortnightly, and monthly. We have 12 consecutive monthly contracts available as of now, which enable buyers or sellers to trade in our fixed price contract. We also have introduced contracts linked to international price benchmark published by S&P Global Platts. 3 months and 6-month contracts are available on rolling basis. Indices available are namely WIM, JKM, Brent, and JIXI. As we move ahead, power sector is a pivotal juncture. Projection from ICRA indicates that India's electricity demand is expected to grow by 5 to 5.5% in financial year 26. This growth, while robust, is reflective of our nation's economic progress and increasing industrial activities. The government is confident in meeting the anticipated peak power demand of 277 gigawatt in financial year 26 to optimal utilization of existing and under construction capacities, ensuring coal supply and strategically operating gas-based power plant during peak demand periods. In this dynamic scenario, the role of gas-based power plants become increasingly significant, while thermal and renewable energy sources continue to be the primary drivers of capacity addition, with a projected total power generation capacity addition of 44 gigawatt in financial year 26, the highest ever in a single fiscal year. Gas-based power plants are vital for grid stability and meeting peak demand. The Ministry of Power directs gas-based generating stations to operate during periods of high demand to ensure maximum electricity generation, especially during summer months. This highlights their strategic importance as flexible power sources that can quickly respond to demand fluctuations, complementing the baseload and intermittent renewable energy generation. Today's discussion aims to explore innovative strategies and collaborative approaches for sustainable natural gas sourcing, ensuring energy security, and supporting India's ambitious clean energy transition goal. We are especially honored to have with us today's esteemed speaker, Shri Ajay Talgaonkar sir, Member Economic and Commercial from CEA, the apex body responsible for policy matters and development plans for India's electricity system, and Shri Vivek Pandey sir from NLDC, the cornerstone of ensuring the integrated and reliable operations for our national power system. Their insights will undoubtedly be invaluable as we navigate the complexities and opportunities in this sector. A big thank you to our speaker, Shri Ajay Talegaonkar sir and Shri Vivek Pandey sir, for taking time to share their expertise. I would like to welcome all the participants who have taken out time to attend this webinar. The theme of the webinar is natural gas sourcing by gas-based power plants, and we hope that by the end of this session, our stakeholders will have their queries resolved and look IGX as an option to source gas. To kickstart the event, I would like to invite our MD and CEO, Shri Rajesh Mediratta sir, to address the audience. Sir, over to you, sir.
Thanks, Pranjal. And very warm welcome and good afternoon to all. First of all, thanks to my dear friends, Mr. Ajay Talegaonkar, member ENC, CA, and Mr. Vivek Pandey, GM NLDC, who have taken out time for this webinar. And their insights will be very useful to all the market participants who are participating on this webinar. And as we all know, we are operating since the last 5 years and cater to all segments of gas sector. And power has been one of the important sector. And though at one time, power was one of the highest gas consuming sector, but over a period of time, the power consumption in the gas consumption in the power sector had declined. Actually, if you go through any reports published in 2009, 10, 11, that time, even in 2013, I saw a report where we expected the gas demand by power sector almost equal to 100 mmCMD, which will take care of gas requirement of say 25 gigawatt of capacity and meeting a PL of say 80-85%. But what happened? Of course, that time prices were about $3, and everybody was anticipating huge gas coming from KG Basin. And that time, of course, before 2010, the power was the first priority, getting the first priority for APM. But of course, that changed in 2010, and that became one of the important issue in when we see the decline of PLF of gas-based power plants. And after 2021, when the COVID was over, the geopolitical crisis occurred. And then that time we saw the prices of gas have been more than double digit always, and sometimes even touching $40 per MMBTU. So actually, power prices and then declining APM has actually resulted into gas consumption coming down. And today, if you see this year so far, it is only 12% of total gas consumption is consumed by power sector. Last year it was about 15%, and that too largely APM and little spot and other free market gas. And we understand that few power plants still get a lot of APM, including plants in IPGCL, Uran, Trombay, and a few others. But majority of power plants have to rely on the spot gas from the market. And if you see today, we consumed something like this quarter, we consumed something like 26 CMD, which is about 30% lower than last year. And of course, we all know the reason that we anticipated the gas demand, the power demand, power peak demand of about 270 gigawatt in this summer, but we touched something like 240 plus gigawatt. So that, of course, did not give opportunity for gas power plants to utilize gas, and the utilization has remained much below the expectations. Now coming back, I'll just give you some brief on IGX. We are operating since last 5 years. We started with something like 5 contracts that did not include day earlier. But we started day also something in 2023-24, and intraday also was launched in 2000 last year, and that these two actually were actually especially launched especially to take care of power sector demand. We initially started with something like 6-7 delivery points. Now we have 21 delivery points where all the buyers can buy depending on their requirement, transmission tariff and taxation. They can buy from any of those delivery points. And these delivery points all include the entry points for gas. And that include LNG terminals and then domestic fields, and there are a few interconnector which are also included as delivery point to create ease of trading based on the requirement and based on the convenience and economics. We also have option of delivered transaction where exchange takes care of delivery, and of course somebody who doesn't want to suppose somebody wants to buy directly and take care of delivery, that also is possible on the exchange. Important point I just would like to highlight is last year we touched the total maximum scheduled delivery in a day of something like 17 SCMD, and that's very significant because in earlier years we were doing a trade of a smaller quantum, and then that was not getting that was not giving comfort to the big buyers like from the power sector. But now since we have maintained a kind of delivery schedule of something like last year we did something like 4.1 CMD, and touching something like 17 CMD. That's a big, that's a decent quantum for anyone to rely on the exchange. In terms of participation, we have more than 200 plus buyers, 35 sellers, and all CGD companies, city gas distribution company, marketers, power plants, and few industries.
So you are on mute.
Yeah. Is it okay?
Yes, sir.
Did you miss major part or?
No, just only 5
Okay.
seconds. Yeah.
So, coming back to the main theme, that why we are talking about utilization of gas-based power plants. The reason is we all know that energy transition is a story playing on, and everywhere people are talking of transition. And we already have added in India, in terms of renewable capacity for electricity, we have something like 120 gigawatt of solar now and 50 gigawatt of wind, which gives you something like 12 to 15% of total energy, which is renewable. Now, when you see renewables are coming in such a big way, still lot of things to happen. We will be actually increasing our capacity of solar plus wind to 500 gigawatt, and that's a big number. And when all of this happens, then we understand that there will be more requirement for peaking, particularly evening peaks, because you have a lot of capacity during the day, but evening you are left with little capacity. Of course, we are adding coal, but gas can play important role. And gas can play a role in terms of giving peaking support. And another area which probably we have not seen much happening is in terms of intermittency. So because India is a large grid and intermittency definitely has not created much of issue today. But as we increase our renewable energy consumption from say 12, 15 to say 20, 25%, then all of these will also become important. And good for power sector that we have ancillary markets which uses gas for peaking. And there also we have started helping gas-based power plants in terms of providing intraday contract and day contract. The timelines in which gas-based power plants earlier were getting pipeline capacity was longer. Fortunately for us, and with the support of GAIL, we could get these timelines shortened. Now, gas-based power plants are able to get transmission capacity or transport capacity on day from on any network. And for intraday, they are able to achieve something like from at least GSPL network. Maybe more networks will be able to facilitate this availability of intraday transport capacity. Now, these were few things we fortunately could able to do with the support of our pipeline operators and the regulator. But of course, we need to do more. But on our own, we did many things. IGX kept on tuning the contracts as per the requirement of power sector. Initially, we brought flexibility in terms of delivery, which earlier contracts did not have. We also allowed actually power plants to consume almost 30% of their contract quantity on a single day, even if you have done week or fortnight or longer contract, you can do something. You can draw a lot of quantity on a single day, and many days you may not withdraw any quantity as a power plant. And earlier, before that, all our contracts were mostly on uniform delivery basis on daily basis. Then we got capacities from the pipeline operators. We are able to get intraday capacity also from GSPL. So we have seen a good support coming from this NTPC and RGPPL. They both have started utilizing these contracts from gas exchange very much, and they capitalized a lot of their buy from the exchange. And other plants also started using, but that was something they could have done more. I would also like to add here, interestingly, gas exchange regulations, when the regulator issued the regulations in 2020, they had also kept a provision of coupling gas and power exchanges. And of course, they have kept that provision. We have so far not started working, or we have not actually implemented that so far. But we definitely can do. The idea is that any power plant should be able to buy gas on gas exchange and should be able to sell power on power exchange without taking any risk of not having gas or not having power sold. And this, of course, we can do. We have worked out something, and of course, in some other webinar, we will share more and then we'll get feedback on that. Idea is that we can do day-ahead contract, where you can buy gas on a gas exchange and sell it power on the power exchange. On day-ahead basis, it can also be done on weekly basis or daily basis, and all of that we will discuss more as we go along. Now, we all understand that almost like 20 gigawatt of capacity of gas-based power plants are not fully utilized, rather very minimally utilized, only up to 15%. Now, we also feel that few more interventions policy side are required. And of course, that those also we may discuss, and we should actually work on those interventions also. Few of them I just would like to highlight. One is that on the power side, our price cap in the market says rupees 10 per kilowatt hour. And if you see the power gas prices are ruling something like $12 to $13, even when it has softened a lot during this year, then the variable cost comes out to be something like 11 rupees. And then these power plants are not able to actually utilize gas and sell power because the cap in the market itself is 10 rupees. So one way to resolve it is maybe we raise the price cap from say 10 rupees to 15 rupees, so that on an average your average price of the day may go up a bit little, and then we should be able to see more dispatch coming from gas plants. And even if it is not being used throughout the day, but in peak hour, if you see a price of something like 12, 13 rupees, then many power plants will become dispatchable if the price cap is raised from say 10 rupees to 15 rupees. Second thing, on the gas side, we need to shorten the timeline for getting capacity. Of course, something we already have done, but we can do more. We also can think of having interruptible capacity. Most of the matured markets have got two types of capacity: firm capacity and interruptible capacity. Normally, and in India, we only have provision of firm capacity. We can think of having interruptible capacity of option also, where if power plant requesting for capacity is not able to utilize, then they should not have any ship or pay obligation, and that probably will help power plant to dispatch better. Then another area where we also see no debate happening is that the gas day is from 6 a.m. to 6 a.m. next day, whereas power day is a calendar day from 00 to 00 hours of next day. So that also needs some alignment because sometimes your gas-based power plants may require that kind of capacity and also the dispatches, but markets of two sectors are differently aligned. Timings are different, then it really can create problem. Incidentally, that problem is not so much seen because in the night hours power plants anyway are not operational because in the night time your demand is low. But otherwise, if when the power plants will start running, gas-based power plants will start running throughout the day, then it may create some kind of issues in having two different alignment of timelines of the days in both the sectors. Another area where we need to work out on the exchange side is, of course, how we can actually do a coupling of gas and power, which we will come out with, of course, our own design, our own contract, or how it will work. And then we will share, and then, of course, we'll see that how that gets implemented. So, with this, I would like to just wish that this webinar, by end of the webinar, all of us should have something to learn. I am very hopeful that it will be very useful to everyone. And keep your questions stay with you for to the close of these speaking sessions. And I think last 30 minutes are kept for the questions, and you may either I don't know how that will work. Pranjal will share that. So thanks again to all of you for joining us together today, and we wish that these discussions will be very useful for everyone. Thank you.
Thank you, sir, for sharing your insights with us today. I hope our participants have gained valuable insights. Now, please join me in extending a very warm welcome to Shri Vivek Pandey, sir, Chief General Manager from NLDC. As many of us and many of you know, the NLDC plays a crucial role in India's electricity sector, ensuring the real-time operation, stability, and reliability of national grid. We all are eager to gain insights from his operational experience and deep understanding of this crucial domain and how power sector and gas sector can be more aligned. I hand over to you, sir. Vivek, sir.
Yes, thank you very much, Pranjal, and thank you to IGX, Mr. Mendi Ratta, for reaching out and extending this invitation to be part of this webinar. From Grid India, from NLDC in particular, we would certainly like to engage with more and more stakeholders to ensure that we get more flexibility from the various generation resources. So the context was very well set by Pranjal and Mr. Mehdi Ratta. So I'll just carry forward and just give you the overall picture of what the scenario is like in the power system and what are the kind of services that we expect from particularly the gas sector, gas based stations. And we have had some experience in respect of that. So some experience sharing and learning from those experiences. A couple of points already have been highlighted, but maybe through this presentation, they may become more vivid. Can you go to the next one? So we all know that we are adding a lot of renewable generating energy sources into the grid in our transition to the green energy future, less carbon footprint. Pranjal, next slide, please. So what we see is on this graph that I'm trying to highlight is that we have the demand curve. We have the demand curve, and that demand is to be met from a variety of sources.
Pranjal, presentation चला गया स्क्रीन से.
Yes, yes. So the topmost curve that you see, the maroon color curve, shows the demand, a typical demand. So this one I have picked up for a Sunday, 2nd June, Monday demand curve. So when this demand curve is there, we have to meet this by various sources. So renewable being the must run. So what we can do is we first supply this demand through the renewables and then identify the balance demand which has to be met from the conventional sources. That is the thermal, nuclear, hydro, gas, biomass, etc. So the blue curve that you see in the middle, that denotes the demand minus the supply that we get from renewable. So that is what we call as the net load. Now this net load, you can see that it has high variability. Since we have a lot of solar capacity that comes in and delivers during the solar time, that is particularly from early morning 6 hours to 6 p.m. and it peaks at around 12:30 to 1 p.m. So you see a trough. So, and that trough creates stress on two sides. One, we have to reduce and reduce the conventional stations, particularly the thermal stations, which are the maximum dominant contributors. And then as the solar goes down during the evening, post afternoon, then the thermal has to ramp up. So you can see the ramping requirement in the evening hours. Similarly, this curve, when you look at in the winter months, what you typically see is that winter months, most of our this thing solar capacity, by virtue of being located in the western part of the grid, where the sun rises slightly late, and many a times in the northern region we experience fog conditions. Then the demand picks up early, but the solar supply is slightly delayed, and many times it delays to the extent that we may have extended fog and or cloudy season, cloudy conditions. So then there is an additional sharp requirement of meeting the morning ramp. So one, peaking requirement. Second, requirement of flexibility of going down and going up in case of cloud cover and all those things. So intermittency and variability both has to be handled. Next slide, please. Yeah. So over the period, if you see on the right side, two charts I have shown, high dense charts. These are for the last decade. The demand variability that we have been experiencing is in the tune of 15 to 20 gigawatt per hour. And daily variation, the difference between the maximum demand and the minimum demand on a daily basis has been continuously on the rise. And as of now, it's in the range of 75 gigawatt. So this variation within the day has to be supplied or kind of met by flexible resources. Next slide. The other thing is the ramp that I mentioned. You can see typically 250 to 300 megawatt per minute. That is the requirement of the ramp. And on exceptional days, that could go as high as 500 megawatt per minute. So these are the flexibility attributes, basically ramping up, ramping down, turn down level. That's the minimum level to which the generation can reduce. Then the startup time, because if we have surplus generation, many a times if we have oversupply, then we may require to close down certain units and then bring back those units to supply the non-solar demand during evening peak. So there the startup time becomes very, very crucial. And we all know that the thermal, the coal fleet, it may not have that kind of flexibility, although a lot of interventions and some technology changes are being tried out to enhance the flexibility of thermal. Still, we need more and more flexible sources as we go forward. Next. So the conventional flexibility services we have been trying to harness from the existing thermal fleet, and the best that we are able to achieve is to the tune of 60 gigawatt on a daily basis. On the right side, you can see the red color graph, which gives the typical scenario for a thermal station. So in the morning or even early morning, it's around 150 gigawatt. It goes down to below 100 gigawatt during the solar peak, and then it starts ramping up and meets the non-solar demand. So it's a total inverted curve of the solar supply curve, if you see. Yeah, next. Hydro also is considered as a flexible resource, but considering the nature of hydro's generation, in our case, we have most of the hydro stations as run of the river kind, very limited storage. And even those which are storage type with reservoir, they have many other commitments and social obligations, drinking water, irrigation, and all that. And the power generation is just a incidental kind of byproduct. If whenever we get those inflows, we are utilizing those inflows for and generating power and injecting into the grid. So during the non-monsoon seasons, the winter months, the inflow is limited. So again, we have to serve the morning and evening peaking demand. So there they just come for 1.5 to 2 hours in the morning and evening, meet the peak demand and go out. So they remain on bar for only very limited time. During high monsoon seasons, high inflow seasons, as we have experiencing now, there again, we would not like to spill water. So the hydro operates round the clock most of the time with very limited scope for reducing generation, even during high solar hours. So the flexibility, though it's a flexible resource, but because of the nature of inflows and the characteristics of our terrain, mostly they are rain fed and monsoon fed. So we have this kind of flexibility constraints on hydro also. Next one. Nuclear, we all know it's a base load, so it hardly provides any flexibility. Although there are efforts to have modular reactors, small modular reactors, but then again, it's still in the conceptual or say in the lab stage itself. So for meeting this flexibility requirement, we have balancing needs. There is a provision of ancillary services and an explicit regulation has been brought out by Central Electricity Regulatory Commission. And these are the different categories of ancillary services: primary, secondary, and tertiary. Primary is mandated as per grid code. So there is no separate compensation as of now. But secondary and tertiary do have some compensation mechanism. Secondary is nothing but the automatic generation control. And right now we have around 80 gigawatt of worth of capacity. Predominantly, again, the thermal capacity, which is wired for providing regulation services. And these power plants, they receive dispatch instructions from National Load Dispatch Center every 4 seconds. So every instance, a dispatch goes to either increase generation or decrease generation to balance the grid and stabilize the frequency. The third one is the tertiary. And in tertiary, we have both two categories. One is for section 62 plants, that is the ancillary shortfall category. And we also have an explicit market for ancillary, wherein the capacity, spare capacity, they can bid into the market. So from NLDC, we place the requirement and the bids have to be offered in the power exchange, who collect the bids and then they send it to NLDC for clearing. So once, so for up bids, that means for providing generation when the frequency goes down. So those are known as up bids, TRS up bids. It's a uniform clearing price, whereas for the down bids, that means if the frequency is high and we have to instruct to reduce generation, so those bids are pay as bid. So the capacity which gets cleared by NLDC is kind of, it is a spinning capacity. It is there on bar and it's a committed capacity and it gets dispatched only when an instruction goes from the NLDC. It is not a continuous dispatch. It's an intermittent dispatch. So that is why if you have to participate in the tertiary, particularly the merchant capacity or untied capacity, if you want to participate in tertiary, then you need to have certain underlying schedule. Now, in this, I'll just come further also. There is another way in which Ministry of Power created an avenue, that was an advanced procurement of reserves. So that we'll discuss more. See, other services, black start and voltage control, again, black start is for resilience. When we have a blackout in a certain area and we are unable to extend supply from the grid, we may need to self-start certain units and restore the system. Conventionally, several hydro plants and several gas stations, they have this capability for providing black start. And CRC in the recent Grid Code 2023, they have again created a explicit compensation for entities who provide the black start services. And voltage control, that was there earlier also, and now it has been again brought into the grid code. So for anyone providing reactive support, gets compensated at 5 paisa per kVRH with an escalation on an yearly basis. So these are the broad ancillary avenues in which any generating station can participate. Even renewables can participate. So it's open for all, irrespective of their interconnection, whether they are at interstate level, falling in the jurisdiction of RLDC, or they are, even if they are intrastate plants, the regulation allows participation by in the ancillary market. Next. So this is just the definition. Primary has to come instantaneously, secondary within 15 minutes, and tertiary again within 15 minutes, but then it should be capable of sustaining at least for 60 minutes. So all these characteristics are very well available with the gas plants. So that is why we expect more and more gas plants to participate in this market. And if you look at globally also in other parts of the world, it's basically mainly the gas plants which offer this kind of flexibility. Next. So right now the capacity that we have in all over India, 19.6 gigawatt of gas capacity or generation capacity exists in the grid. Some of it, of course, 2.7 gigawatt or so is isolated field connected capacity, which is kind of again a must run capacity, and that runs around the clock based on the local gas availability. The other 16.9 gigawatt is pipeline connected, and that is where the requirement or the supply side constraints also start coming into play when we look at the flexibility aspect. Then what we have seen that over the years, despite having this good amount of gas capacity, we have had very limited. In fact, the contribution of gas in the overall energy mix has been continuously declining over the years. And that is probably because of the supply side constraints and the rising costs of gas. So that makes it an extremely costly resource, and the beneficiaries or the procurers, they have this limitation of requisitioning, even if they have a bilateral PPA. And market side, as it was already highlighted, that there is a price cap of 10 rupees right now. So any capacity which has a variable charge beyond the 10 rupees would find it very difficult to get schedules from either from the market or from the bilateral this thing, because many SCRCs may have placed certain limitations that the buyers may not procure beyond a certain VC. Next. So the next slides, I'll just try to, you can see here the decreasing, the flexibility is constrained by availability of gas and all that. Next. The other part was the contractual inflexibilities, which again was highlighted. One is because of the kind of, so more and more flexibility needs to build in the gas contracts. So in fact, from last 2 years during the crunch months, so basically these are the high demand periods or the summer months, starting from April end to September, we have a high demand, particularly in the northern region, because of the agricultural load rising and the space cooling requirements. These are the months we have experienced extremely high demands. And during these months, Section 11 was enforced by Ministry of Power, Government of India, and even the imported coal-based thermal stations and gas-based stations, they were they had this mandate to offer the available capacity into the grid. The right side curve that we are just showing the PLF for the years. Earlier, we used to see up to 67% PLF of gas stations, but these days, achieving even 15% PLF is a really kind of dream on certain days. On a daily basis, it's only just around 30 to 40 million units per day of gas. And when Section 11 was imposed, of course, and the advanced procurement of gas, we did touch somewhere around 200 million units per day, as you can see in the graph, the red color graph. So 2024, we managed to get additional supply up to 200 million units per day. Next. So avenues I mentioned, bilateral PPAs there as well as through the market. And we had this scheme of advanced procurement wherein we identified the number of days. NLDC has that mandate to declare the crunch period, and 14 days in advance, we say that, okay, in the next week, these are the number of days when we might require additional support from the gas-based stations. So the around 2000 megawatt capacity we bid out. We invited bids through an auction. It was selected, and these were given assured compensation of fixed charges and variable charges and taxes and other components, including the startup costs. So the cleared capacity has to, in this scheme, they have to first, on the dates when we say that these are the dates when we require the capacity, on those dates, they have to first declare their availability and offer the capacity first in the market. Whatever capacity gets cleared in the market, that gets scheduled, and the balance capacity up to the minimum technical level, that gets an assured schedule from NLDC under the tertiary reserve ancillary services. In fact, we run a unit commitment algorithm, and based on that, we define how much capacity we require. Although we also see the anticipated weather conditions and all that. So in day ahead, it's very clear that next day, these are the this much capacity is required. So whatever capacity has cleared through this, so they say that I can offer you this much megawatt, and then it goes into the market. Balance we schedule under TRS, and the capacity is on bar. So we don't allow that schedule to go below minimum technical level. And if in case we need more generation, more output from gas stations, then under merit order, first we dispatch the cheaper stations, and then if we reach up to the gas stations, then they also get additional dispatch over and above the minimum technical level. Particularly, it occurs during the non-solar period. So this scheme has been working quite well. Next one, I'll just show how. Yeah, so this is the kind of typical dispatch. The left one is showing the aggregate dispatch. There are two different scenarios I have shown. The blue curve shows one particular scenario where we only call for additional capacity under open cycle. So during the day, only the off-grid gas stations are running, and during non-solar, we get this advanced procured capacity, additional support from this. So they dispatch in open cycle, and then they are withdrawn. So next day again, if we require, we again ask them to synchronize back into the grid. supply during the non-solar hours, and move out. That is one mode in which we operate. The second one is the orange one, left side orange one, wherein we say that we may require this support from gas round the clock. Or in fact, if it is more than 8 or 9 hours, then it generally we convert it into the full day dispatch. So during the day, they operate at technical minimum level, and during non-solar hours, so evening as well as during early morning hours, they synchronize their steam turbines also and operate in closed cycle mode. So that is how we are able to get up to 10,000 megawatt during the non-solar hours. So still we have a lot of scope. We would like to have more and more of participation from gas. On the right side, the dispatch is for a typical plant. Left one is the aggregate at an all India level that we see. Left, right side is the typical for a particular power station. What could be the dispatch? So the green one, as I mentioned, it's 0. And then from afternoon, it starts ramping up, supplies power, peaks for peaking support, and then moves out. Red is what I mentioned, round the clock. So morning it's supplying, then during the daytime it's at technical minimum, then evening again peaking. And okay, so this is the typical profile that you might see if as a participant. Next. So the experience has been relatively good. So it has enhanced some provided that support, but there has been feedback, and we have shared this with CEA and Ministry of Power also. Ajay Talegaonkar sir is also there. He might dwell more upon these. So if we can somehow bring down the VC, the variable rate of these gas plants, so they might become more dispatchable. And the other thing is the technical minimum level. Right now, it's 55% of the maximum continuous rating that is being asked for. But technically, as an open cycle gas turbine, it should be possible to even go below 55%. So that can be examined by the plant owners. So if you are able to give us lower minimum technical level, then we will be able to better utilize in ancillary service. The third is right now the gas stations, since they come in for a very limited time, generally they do not participate in the secondary ancillary services, that is the AGC, although several gas plants have been wired. So this is the third support that you can examine, because SRAS AGC, that also has certain incentive structure, so that could also be considered as an additional revenue stream. With more and more participation, of course, more competition, that will help us in probably bringing down the gas prices also. So the regulations are very clear, the mechanism is in place, but then let us come together and address whatever constraints we are facing so that we can bring in more and more capacity. So I'll pause here and allow on the other inputs to come. Thank you very much.
Thank you, sir, for sharing your insights with us today. I hope participants have gained valuable insights. So if any participant have any questions, so they can drop the question in the Q&A box. We will take the questions in the last session. So now to provide a brief about the IGX working model and for the theme presentation on natural gas sourcing by gas-based power plant, I would like to invite Shri Deepak Mehta, Chief Business Officer at IGX, to take our participants through the same. We'll also be holding a query session towards the end of session. So please feel free to drop your questions and answer into our question box. Deepak sir, hand over to you.
My screen visible, Pranjal?
So presentation is not visible. Should I share it, sir?
Visible now?
Yes, sir.
Thank you, Pranjal. Most of my slides were covered in Rajesh sir's address, but still I will highlight the important ones once again. So as he mentioned that we are the only exchange right now in India operating under the ambit of PNGRB with further reporting to MOPNG. So currently the entire India is divided into 6 regional hubs and we have 21 delivery points right now. We offer two types of contracts. One is the fixed price contract and one is the index based contracts. So in the fixed price contracts, you have different options. That's the flexibility. You can say one of the USP provided by IGX. When nobody thought that getting gas on the same day or the day ahead or daily basis would become a reality. But since the inception of IGX, these things have become now, we can say, very common. We usually see intraday trades happening on the IGX platform. Day ahead participation is also on the higher side from the power companies. Then we also offer daily, weekly, weekday, fortnightly, and monthly contracts. And since natural gas is an international commodity and is very volatile, so buying and selling at a fixed price might not be feasible when you want for a longer duration of time. So to address that audience, we have also signed up the licensing fee agreement with S&P Global. And because of that agreement, we have launched two LDC contracts also, where we give the option to the market to source gas from IGX platform linked to any of the four assessments. So four assessments, those are available on the IGX platform include JIXI, then you have JKM marker, then you have WIM and dated Brent. And we have already seen few trades happening with the prices linked to Western Indian marker. Price discovery on the IGX platform, just for the benefit of everyone, it's exactly the same what we are doing in IEX platform. The only difference is that there it is the closed auction, and while in on IGX it is an open auction. Since natural gas is not covered under GST, so it's very important to show at which delivery point the seller is available, because different states in India attract different VATs. So it is very important for a buyer to know from which state he will be sourcing the gas so that they can calculate the landed price from that particular state. And we facilitate all types of gases, whether it is imported gas or the domestic gas. That includes HPHT also or pricing freedom gas. And we have also started the SSLNG contract, that is movement of natural gas in liquid form through trucks. So pricing, I think I can skip the slides, very much like IEX, just to highlight that we collate all the buy side bids and the sell side bids, and the basic principle remains the same. The intersection point where the maximum volume is getting cleared, we declare that
Deepak,
clearing price. Yes, sir.
Your first slide is only visible. It has not moved.
Screen on.
Visible now, sir?
No,
No, sir.
not.
प्रांजलि भाई आप शेयर कर लो एक बार फिर कुछ
कर
issue
देता
लग
हूँ
रहा है।
उसको। Visible now, sir?
Yeah. Go ahead, Deepak. Deepak,
So there is some internet issue, sir. Apologies. Pranjal is just reconnecting, sir. देखो दोबारा चालू करो प्रांजल को ज्वाइन करना तो वह चालू दोबारा Is my screen visible now, sir?
Yeah, yes, Deepak, it's visible. Go ahead.
Okay. Okay. So apologies for this delay. Just to highlight how the price discovery is happening on IGX platform, I just mentioned that the mechanism remains the same. The only difference is that we have open auction on IGX. It's very important to show the seller presence of seller in which state that seller is offering molecules. Since natural gas is not covered under GST and different states have different VATs. So it is very important to calculate the delivered price for any buyer. So that's the reason we have 21 delivery points on IGX. Maybe once this is included in GST, you will see maybe one delivery point on IGX platform. So the basic principle remains the same. We plot the buy and sell bids, and where the maximum volume is getting cleared, we discover the market clearing price of that particular contract. So for example, if we have 15 contracts listed on IGX platform, we carry this mechanism for all 15 contracts. So different contracts, maybe at the Dahej or Hazira, maybe Mashkal, the same discovery process is followed. Just to add to this double-sided auction mechanism for our intraday, day-ahead, and daily contracts, we follow a mechanism of continuous trading. So what we see in equity market, where the buyer and seller bids, it can be matched multiple times during the trading window. So in case of auction mechanism, we discover only one price in a contract, whereas in case of daily contracts and intraday and day-ahead, multiple prices in a same contract can be discovered. Just a typical trade flow of IGX, our bidding cycle, or you can say the exchange is open from Monday to Friday. Our auction model, auction is available from 10 to 3 p.m. on daily basis, whereas for the continuous market, it is available for 5 p.m. And this market hours were extended, especially for the power segment, since the information received by power companies were usually after 3 p.m. So based on their request and based on market feedback, we extended the continuous market trading hours on IGX platform till 5 p.m. And post that, we have seen several trades happening in that market. Just to add, we have 10 to 3 bidding time, where we collect all buy bids and sell bids. Then we have matching algorithm, which is approved by PNGRB. So we have a matching engine where all the bids are placed, and we come out with the matching market clearing price and the market clearing volume. Post that, as Rajesh sir also mentioned, we offer two types of trade. One is X-up and one is deliver transaction. So deliver transaction, you can say, is again one of our USP. We have a GTA agreement with the major pipeline operators in India that includes GAIL, GSPL, PIL. So what does this mean? That we offer this facility, you can say, to all the buyers. We have umbrella agreement with the transporters, where the liability of all the agreement clauses is passed on to the buyer. We are just a facilitator, that they don't have to deposit any money to the transporter directly. They can simply opt for delivered transaction through the IGX platform. So once the confirmation is received from the pipeline operator that yes, molecules can flow from the entry point to the exit point, the scheduling is done, and finally this information is broadcasted. Till the time of bidding, this is anonymous, but once the trade is concluded, buyer and seller, they come to know about each other, since the invoicing has to be done between the parties directly. This is how the volumes on the IGX platforms have grown. We started with a very small base in financial year 22, but we have seen decent growth on IGX platform. You can see in the last financial year, our daily volume was close to 4.2, 4.3 MMSCMD. The total number of trades executed on the IGX platform is again close to 1700. That means close to 3 to 4 trades we have done on daily basis. And one trade you can just correlate with the signing of one GSA. Out of this 4.1 MMSCMD, the domestic gas, that is ceiling price gas sold by ONGC and Reliance, that contribution was 37%, whereas free market gas usually done by companies like HOEC, ONGC, and Vedanta, that was around 4%. So we have seen a growth of 47% year on year. So if you add the delivery part handled by the IGX in the whole year was close to 62,000 crores. And the major, you can say, the advantage of why you should trade on IGX platform, that instead of talking to a bilateral seller or buyer, that is one-to-one negotiation, on IGX platform, you'll see 35 sellers actively participating. And we have right now more than 200 buyers also participating regularly. So that's the reason we say that price discovery on IGX is on a very competitive basis. So as far as the power plant gas consumption data is concerned, the allocation to the power segment, the gas-based power plants, you can see the APM contribution would be around, say, 11.35 MMSCMD. The long-term agreement signed by them directly with the suppliers linked to few of the assessments or maybe fixed price, that is 3.26. And if you talk about the pure spot size, that is around 5.22 MMSCMD. So we usually target the spot part, that in case IGX, if a cheap gas is available on IGX platform, the spot requirement should be met through IGX platform. So this is how the delivery volumes we have handled on month-on-month basis. And the red line is the very important part. I mean, you can say the addition done by IGX in last 3 years. So earlier when we used to talk about the Indian spot prices of natural gas, nobody had any idea at what price one buyer is sourcing. The prices were different for all the buyers. But now this transparency has been brought in by the IGX platform. This information is disseminated to the market participants on daily basis. So you can see for the July month, the average price discovered on IGX platform was close to $12 per MMBTU. So this is one very key observation, that why buyers should come on the IGX platform. So what we have done is we have just shown a spread between GIXI prices and the WIM price, basically two indexes. And we have observed that most of the time GIXI prices are trading at a discount to WIM prices. So both the prices are calculated on ex-Dahej basis. So the message we want to convey through this slide is that international or the RLNG, which is the main segment consumed by power companies, our gas molecules are always available at a discount compared to the international spot prices. So before you decide on sourcing gas from any party, at least one trial you should always give on the IGX platform if it is really available at a discount compared to international prices. A few of the IGX members and clients, you can see we have covered almost 90-95% of the market participants. And the way the gas pipeline or new networks are laid, this number is continuously increasing. So we have all the main players on IGX platform, including GAIL, GSPC, all the refiners, BPCL, IOCL, HPCL are very active. International sellers like Shell, Total, they are very active. You name any CGD entity, right from IGL, MGL, Gujarat Gas, they are very actively participating on the IGX platform. And on the client side, the parties having, less consumption have joined IGX as a client, and this includes all the major glass companies, ceramic companies. And just to facilitate the small clients, we also have a broking model. We have 5-6 very active brokers on IGX, including Manikaran, GMR, Geeta, Create. They offer client services to their third party, you can say. So proprietary member, usually they trade for themselves. They cannot offer third party services. But the brokers or the TCM, they don't have any proprietary requirement, but they offer services for third parties. So that's the basic differentiation between proprietary member and the trading and clearing members. So the initiatives done by IGX have already covered, especially for the gas-based plants. We extended our continuous market timings. We also introduced the intraday contracts. So we are slowly moving towards the real-time market, you can say. We also have designed a special contract for power companies, for power plants. I have one slide on that also, just to cover the salient points of that contract. And based on support provided by GAIL, GSPL, and PIL, so booking of capacity in 1 day notice has also become reality. And as I mentioned that because of presence of 35 active sellers on IGX platform, there's always a competitive environment. And we are also exploring power contract on RE basis. So this contract is in pipeline, and if there is any demand from any particular power company, we can definitely think of launching this at the earliest, you can say. The key highlights, as mentioned by Rai sir also and Pranjal also, we have a special power contract. Right now, 3 variations are available, that is monthly, fortnightly, and weekly. So the broad idea I'll give you, the normal contracts attracts a 90% take or pay, where the drawal has to be on continuous or the consistent basis on daily basis. And power companies, they have a very peculiar style of consumption, that some days the plant is not operational, whereas some days the demand is on the higher side. So to address that concern, we have launched a power contract where the power gas-based power plants can nominate anything between 0 to 30%. However, 90% of the commitment they have to fulfill. So 90% instead of calculating on daily basis, this is calculated on the monthly basis. So that means that if a power company has traded for a month, 20 days they can say maybe they can keep their plant off. But in last 10 days, they can ask for 3 times of what they have traded, and they can fulfill the 90% of the requirement. So this contract has become very successful, and we have seen trades happening in all the variations, right from weekly, fortnightly, and monthly. And based on power company's feedback, we have also added the recovery period in all the 3 variations. So in case power companies fail to utilize the entire quantum what they have traded, we provide a recovery period of 7 days in a monthly contract, whereas in fortnight it is 4 and weekly 2 days. So the gas buy-based power plants on IGX, currently 9 GBPs have enrolled and they are actively participating. A few of them are very active, whereas few others have to still initiate the transactions on IGX. The total quantity traded by them is more than 425 MMSCM. The total number of trades, I mean, it's on the higher side, since we mentioned that most of the trades done by them is on a day-ahead basis or in a daily contract. Till date, no take or pay penalty has been levied on any of the gas-based power plant, that is 0. And the default from the sell side again has been none. So this is the key highlight. This would maybe facilitate or maybe give you a confidence that IGX, yes, you can definitely explore IGX as a platform where you can source gas for your power plants. Just to give an idea which product the power sector prefers, you can see most of the trades have been happening in daily contract followed by day ahead, and intraday also we have seen 15 trades happening. Monthly contracts, since the launch of special contract for power companies, we have seen monthly contract also becoming very popular. And the contract-wise quantity, naturally the monthly quantity would be on the higher side, since it's a 30-day commitment. But still, you can see in a day-ahead contract, the quantity or the numbers are substantial. So this shows the liquidity IGX is having in all the variations, whether it is the product wise or the contract wise. We have just kept one slide just to showcase that how GIXI prices can play a very important role when compared to WIM prices. So we have usually seen that whenever a decision is made, WIM prices are taken into consideration before arriving at any of the decisions. So we have seen here is that I mean GIXI prices are always, most of the time, always at a discount to WIM prices. So depending on the GIXI prices, I mean power companies can definitely have their energy charge rate calculated depending on the prices being discovered on IEX platform and the IGX platform. So the expected gas prices, we are just giving a forecast, not an IGX, but we have taken this from S&P Global Platts. So based on this, our forecast for the next, you can say 6 months is around $13 to $14. So around 13 to $14. I mean, ECR at plant level can be from 9 rupees to 10 rupees per kilowatt hour. So these slides we have already covered. The important part is that the liquidity is enough. Whenever there is any imposition of Section 11 or any crunch period, different variations are always available. So the GP or the gas-based power plants always have the option to decide on in which contract they want to trade. So one strategy which usually all the gas-based power plants follow, usually there is a practice that they come out with the monthly tender, that this is their requirement, and all the sellers they participate in the tender, and based on the mechanism L1 is selected. But before they source that gas from L1 on need base, they definitely try at a cheaper price on IGX platform. And if there is a seller which is ready to offer on IGX platform a price which is less than L1, usually we have seen the gas-based power plants, they prefer IGX platform to source gas, because since it is at a discount to prices being discovered in the bilateral tender. So enablers required, we are working very closely with PNGRB, Ministry of Power, Ministry of Petroleum and Natural Gas. Our suggestion is that the cap on ceiling price of DAM should be removed. Then, as Sir also mentioned, that introduction of city booking and cancellation of that city booking should be on real-time basis. Natural gas should be covered under GST, as we mentioned that different states have different VATs, and sourcing of gas from different states depends on the VAT that state offers. For example, Gujarat has a VAT of 15% and Maharashtra has a VAT of 3%. So most of the power plants located in the northern part of India, they prefer Maharashtra as a source point. So because of this variation, there's many times we have seen that there is a tax arbitrage between different states. So what we suggest is that natural gas should be covered under GST. One observation we have seen that during holidays, city booking is very difficult. So there should be a clear process how the city booking or the city booking portal should be available on holidays also. One suggestion given by gas-based power plants is that imbalance reconciliation should be done on fortnightly basis. And just to increase the trading on spot basis, the long-term visibility should be given by NLDC to source gas. This is one challenge all the power companies and even the exchange faces. Few of the value additions, I think I can skip this slide, everybody is aware. This is again one important segment, or you can say one of the efforts done by IGX just to connect with the physical audience. This gas analytic tool has been launched by IGX. This is available on our website. This is free of cost. You can register yourself. OTP would be received on your email ID, and you can simply check the historical data, the consumption data, gas to power data. A lot many information is available linked to natural gas and power, especially in India. Way forward, we are working on 4 special, you can say, projects. One is the balance of month contract. So right now, what happens if a monthly contract, say we are sitting today on 14th of August, for example, and if you want to trade till 31st August, you have to do trade in different combinations. You have to say select one fortnightly contract and 2 daily contracts. So instead of having 3 contracts, we have requested PNGRB to allow IGX to launch a balance of month contract. So basic advantage would be that take or pay obligation would be calculated on a single contract rather than 3 contracts. We are also in discussion with PNGRB in launching a LNG cargo trading. That would be both aggregation model also and the direct ship trading model also. Regas capacity trading, again, we are exploring that we should have this facility available on IGX platform. And just to add what Rai sir mentioned, that having coupling of IGX and IEX, since everybody is aware that electricity derivatives have been launched. So we are also in advanced discussions with the commodity exchanges to launch natural gas derivatives linked to IGX prices. So there also maybe you can have a strategy of having a spread trade between electricity future prices and the natural gas future prices linked to GIXI prices. So this is pretty much from my side. Back to Pranjal. We can take the question at the end.
Thank you, Deepak sir, for sharing the brief of contracts available at IGX. We hope that our participants have got better clarity. In case anyone wishes to ask questions, then I would request to please drop your questions in Q&A box. Now moving on, I remember one quote, customer service shouldn't just be a department, it should be the entire company. We at IGX also strive to provide our customer best-in-class experience to trade natural gas. Our contracts are well designed by market feedback and well accepted in the market. It is my immense pleasure to welcome those who have not only embraced the opportunities presented by IGX, but also strategically leverage it to optimize natural gas sourcing cost. Your active participation and strategic engagement on IGX platform are truly commendable. We have seen firsthand how your proactive approach has translated into significant efficiencies and cost saving for operations, and that's something we deeply appreciate. We have with us representatives from NTPC and Ratnagiri Gas and Power to share their feedback with us today. First, we welcome Shri Gurpreet Singh Gavra sir from NTPC to share his experience with us.
A very good
Gavra
evening.
sir.
Am I audible?
Yes, sir.
A very good evening to all connected in this webinar. Thank you for inviting me to this webinar. It's an honor to speak today in this webinar. As a representative of a gas-based power station, I would like to share a few perspectives from the gas generator point of view regarding IGX. Like IGX has emerged as a transparent market-driven platform for gas trading, and its volumes are increasing year-on-year basis on IGX. So it reflects that how confidence is growing in doing trades in IGX by various people and including gas-based generators. When we started, actually, before entering into IGX, we are sourcing gas mainly through long-term contract and monthly contracts. So we don't have any option of going for short-term contracts. So once we get into IGX, so we get all the options of getting short-term contracts like daily, day ahead, weekly, fortnightly, and monthly also. So this has given us a lot of flexibility, because in gas-based station, the major problem is that we are not getting any schedule certainty in schedule. Sometimes NLDC is telling us to start station on the same day, sometimes one day ahead, but schedule is given, but they don't offer to start the stations for the number of hours what they have committed. So sometimes so much variation is happening. We don't get the real-time projections also that in a month how much we will be supplying power. So that type of projections we are not getting, and if we are getting that, they're not correct projections. So in this so much uncertainty, we need such kind of products which can meet our this type of fluctuating requirement. So IGX is definitely helped us greatly in this short-term sourcing, and we are into IGX for last 3 years, and we have sourced around 250 MMSCM of gas in last 3 years, and we are very much happy that we could source these gas at a short-term notice, and now intraday CTs are also allowed, and above all, the launch of this power contract. This has also helped us very immensely, because in this power contract we got the flexibility. We can use the gas, good quantum in a day and zero, and can be made zero in some other days. And above that, when we told exchange that sometimes gas left in the power contract, then they added this recovery period, and the recovery period of 7 days is now part of this contract. And I could share that we got the recovery period more than 7 days also, with the mutual consent with the sellers. So we could get a recovery period of 30 to 60 days also sometimes. So this kind of flexibility, this kind of options we are getting at exchange. So this is like a boon to us, because this has immense greatly in reducing our prices and in managing our uncertainties. It's one of the very important sourcing option now for us. So if I can tell you that our monthly contracts, which we do on monthly basis, we are not using that much quantity from those contracts. Most of the quantities we are taking from the exchange now instead of those contracts, because mostly we get some lower price gas at exchange than those contracts. So I think the kind of innovation you are doing at IGX, like launching a different type of products. Now you are coming up with a balance of power, balance of month contract. That is also very good initiative. That will also help us very greatly in managing the uncertainty which we are facing. And this year the demand is not that much, so the numbers are less at exchange from NTPC side. But we're hoping in the coming months, if demand grows, we'll increase our volumes in the exchange. And I wish all the best to IGX and keep innovating, and that innovation will certainly help this sector. Thank you. Thank you so much.
Thank you, sir, for sharing your experience with us. We hope our business relationship grows even stronger. Now we welcome Shri Abdul Salim sir from Ratnagiri Gas and Power to share their experience with IGX. Abdul sir.
Thank you, Pranchal. Very good evening to all IGX dignitaries, Rajesh sir, Deepak sir. So with IGX we have grown because I remember in the year 2020 onwards we have started interaction for engaging with IGX. So in the year 2022 August, I think we have materialized that relation, and we have started. Initially, we were hesitating to take much volume through IGX because how it works we don't know. We are fresh, we are new to this one because we are used to monthly contracts, RE basis contract, and how we can go from. So we were hesitating to take from IGX initially, but as days passed on, and IGX has evolved and understand our pain, how we works, because as Gaurav sir has told, the power scenario is totally uncertain, especially in case of RGBPL. We are not having the facility for open cycle generation. So NLDC, whenever gives the schedule, they used to give for 2-3 days schedule, but due to sudden change in climate conditions, they used to tell to stop the units immediately. So it was totally uncertain. But over time, we have learned how to manage the gas consumption and how to source better competitive gas at a competitive price. And IGX has helped a lot, because whenever we are going through to IGX, we are always, most of the time, we are getting lower price gas in the IGX, better than the monthly contracts, RE contracts. And we are not having any long-term contracts. But recently we have signed some long-term with this GAIL through NTPC, but it is for a short quantum. But whenever our requirement comes, first we will search for IGX, then only we go for this RE contracts, because we get better prices. So this when time goes, whatever issues which comes, the main issue comes, as Rajesh sir has told, the time mismatch between the power exchange and the power scenario and the gas, because it is 6 to 6 and this one. So accounting for the balance quantum, if at all the power plant stops at 12 hours, the remaining in uncertain condition, what we'll do with the balance quantum, that's a big issue. So if we can couple with the power contract of power exchange, then it will be definitely beneficial for us. And I thanks for the IGX for giving me the opportunity. And of course, we all will evolve as Rajesh sir told. This market coupling of this power and power exchange and gas exchange is very much required, because the issue is we are not getting schedule because of the high prices. So if you can combine this both the exchange for a for operating at a tandem, then it will be definitely beneficial for all the plants, gas plants. Thank you for giving the opportunity. Thanks, sir.
Thanks, thanks for leaving it.
Thank you, sir. We really appreciate the kind words coming from your end. We hope your words have motivated other players to explore opportunities that lies with IGX. Now for the concluding remarks, please join me in extending a warm welcome to Shri Ajay Talgaonkar sir from CEA. Talgaonkar sir brings a wealth of experience and expertise from his pivotal role at the CEA, an organization instrumental in the planning, development, and regulatory aspects of India's vast power system. His deep understanding of the challenges and opportunities within the Indian electricity sector is widely recognized. We all are eager to hear his insights, which I am sure will provide us a deep understanding and stimulate engaging discussions. I hand over to Ajay Talgaonkar sir.
Thank you, Pranjal. Am I audible?
Yes, sir.
Yeah.
Okay. Thank you, Pranjal. Thank you, Rajeshji and IGX for inviting me here. I think most of the issues have been covered in great detail in the earlier presentations, particularly Vivek Pandeyji covered the expectations and the role that gas power plants play in the power sector. And Rajeshji also touched briefly that what is the importance of gas-based power station in the overall power sector. But again, maybe I would like to re-emphasize the same thing, that India being one of the fastest growing economy, our demand is also increasing very fast, because electricity is one of the key input for all the industries, for all the service sector, which are basically drivers for our economic growth. So our demand is increasing very fast on an average, as I think you pointed out, 5 to 5.5%. But in some of the months we have seen even much greater than this. And this is also partly because of climate change that we are seeing, that sometimes when we expect demand to be high, it is not that high, and sometimes when we expect it to be, normal or moderate demand, suddenly we see high demand. So these are the impacts of climate change, other than what people are talking about. Last year we had seen 241 gigawatt of peak demand. This year we expected about 270 or something odd so. But so far it has only touched about 242. But I think maybe there's still some time. Sometimes we get peak demand in August, or sometimes in October also we have seen in the previous years. So who knows, we may even go in greater demand, we can touch that. And the capacity crunch is there we have seen for last couple of years, there's a capacity crunch. Capacity crunch comes mainly in the two periods. One is in summer months, typically late March to say June, when obviously demand is very high because of summer and the hydro is low. But we also see post monsoon also a crunch, and that also comes because demand is still not subdued. It is still relatively high, but now there is supply side constraint, because hydro is now going down, wind is now going down, and sometimes coal is wet. So all this again leads to high prices in September and sometimes October also. So to overcome this 20 gigawatt hour of or something, that capacity that we have is underutilized, as has been pointed out by many speakers earlier also. And this can be a very, valuable resources to meet the gap or the crunch that we are facing. In fact, indeed, we have been using these resources for the last 3 years. We have been launching some scheme, which is where NVVN is the nodal agency, and based on the recommendations of CEA, Ministry of Power approves the scheme finally, and obviously the demands issues and how many days and what will be the demand input comes from NLDC. So just to give an idea, with that for in the 2023, we launched the scheme for originally scheme was meant for 21 days. But as I said, because of and the weather was exceptionally good and there was rain. So there was very difficulty in meeting even the minimum obligation that was given. So it was extended to 40 days just to finish that target which was given, minimum obligation target. In the next year, 24, we launched the scheme for 72 days. So you can notice that from 21 days, we had to go to 72 days. So the crunch period is increasing. That is what I wanted to say. But in this case, since the demand was so severe that our minimum obligation was, instead of 70 days, we were able to finish it in 46 days itself. So, I mean, these are the kind of things that we are seeing. This year, we wanted a longer period because gas generators wanted some more kind of a visibility. And we also realized that if we give more visibility, we'll get better prices. So this time the scheme was launched from 16th of March to 15th of October. About 111 days was supposed to be operating that. And then so far, we have achieved 60% of MGO. And then when we launched the scheme, we thought that in July and August, we may not need to run them. We will maybe need up to June and maybe from perhaps late part of August or maybe in September, we'll need that. But we needed these capacities even in these July and August also. So the crunch is increasing, the period is increasing, its extent is increasing. So what I want to say is that gas-based station will perhaps continue to play an important role in near future also. That's what it appears to me. And then we have been innovating these schemes based on the feedback. As I said, this is the third year. So initially there was some other price formula given, but now we are giving gas prices based on a index, which is West India marker. This time we are giving. So in fact, this gives us flexibility to the gas-based generators to procure from any source they want. Now they are not hooked to one particular source. They can procure, they can beat the price, or they can get this at this West India market price. Then their ECR is actually set based on this. There are three components in this entire scheme. Bidding was done based on fixed charge, where there was a cap of 2 rupees per unit. And then there is a gas link prices, which is, as I said, based on index. And there was other costs and taxes, which were third component, which the bidders were supposed to give them the breakup that what these costs will be. So based on this scheme is running, and we have very good experience. And I'm sure that in future, when whatever feedback we'll get, we will continue to improve this. So coming to that, what are the sources of gas procurement? Obviously, IGX is emerging one of the prominent sources, as we have seen from testimonials of NTPC and other gas generating stations. That this is emerging as one of the options which is being taken up by generators. Of course, other options continue to remain, as we said that we are fixing based on the exchange rate. I mean, one index rate. So, but it was heartening to see that IGX has launched many products. They have introduced flexibility, which is required so much for gas-based generators, and they continue to do so. They are planning to launch some more products to facilitate gas-based generation. I'm sure this will enormously not only help gas-based generators, but also the power sector in turn. Because as I said, gas-based station will continue to remain our important resource for meeting the crunch. As far as the constraints are concerned, obviously high prices is obviously one issue. Currently also it is of the order of $12 to $13. And then people have touched upon this issue of that perhaps we need more flexibility as far as the transportation is concerned, gas transportation is concerned. I think what I have seen is that based on remarks earlier, that lot has been done already as compared to what was flexibility available. But improvements are always a continuous process. Reforms and improvement in regulations is always a continuous process. And I'm sure that as the demand will come up, more reforms will take place in the as far as giving flexibility in the pipeline booking is concerned. So I hope that this will also improve in turn. I think with these kind of flexibilities and the kind of products that IGX is planning to launch, we will have more contribution from gas-based power stations. What we have to further explore is that how we can further reduce the prices. Can we give some longer kind of projection? But as I said, that our main difficulty comes because of this procurement is totally linked to weather conditions. So far as, I mean, today we are concerned, and we are finding it increasingly difficult to kind of project whether even the medium term, let alone the long term. So this is one of the constraints that we are facing, though we realize that if we give long-term visibility, perhaps some more power stations can also come up here. They can have some maybe longer term. Some of them perhaps needs some retrofitting to actually participate in these kind of scheme, because there some of the plants are not operational for a long period. But we have our own constraint in giving a longer term kind of projection for procurement. So with these remarks, I think I will say that this has been very beneficial webinar. I think all the participants would have learned. I myself have got to know many things, or many, although Ajay keeps on coming and informing me about the development that they're doing. But still to see it in a structured way, and then to see that actually NTPC and other generators have got benefited from it is a very heartening. And so I hope that I wish all the best to IGX and the gas market in general, and please continue to innovate, and this will be great help to power sector. Thank you.
Thanks, Ajay.
Thank you, sir, for sharing your insights with us today. I hope our participants have gained valuable insights. So if there are any questions, I'll be taking the questions. So there is one question, but that has been already answered. So another one is suggestion. So there's one suggestions from one participant. So that is basically to reduce exposure to the USD INR conversion, to reduce domestic gas price, some part in INR and some part in USD to be considered, because USD to INR variation also affects gas pricing, in turn power prices. So there is one session from one participant. So if there is any questions from the participant, you can drop that into Q&A box. We can take that up. So if there are no questions, so we'd like to end the session. So thank you everyone for being a patient audience. We hope the webinar was useful for all the participants, and we hope to see you in our future engagements. Have a wonderful day. Thank you for joining the session.
Pranjal, before you close, any of the further comment from Vivek or Deepak? Anything they would like to add?
Sir, I was just about to answer that USD INR question was not actually Pranjal clear. Just for the clarification, what IGX trades is in INR. So it's always better for buyers to trade in INR, because that dollar INR fluctuation is already covered in the contract. When you trade in USD, then buyer has to hedge separately the USD INR fluctuation. But that part is, you can say indirectly, that hedge is offered by IGX.
So the trades in IGX is at INR. So no variation required to be taken care when you are trading on the INR at IGX, because even if you do trade for something like 1 year, still you will be required to pay only in terms of that price will be set only in terms of INR. So thanks a lot, Ajay ji, and I think further we should keep meeting like this, and but of course depends on how the season comes out, how the weather plays its role in the demand side. And then the other thing I said about coupling, we will also discuss that with you and Vivek, and of course more wide discussion will be required before we go ahead. But I feel that will be something also useful. Only thing is we have to work out and with the IEX but not much things required from IEX side. Mostly it will be done from IGX side, because what we are thinking that we'll work out something where we have some kind of trade happening on IGX at the price side. And if somebody looks at the price and he can just provisionally block the trade and then can do a power trade on IEX on date, which will be cleared by 12 o'clock or 1 o'clock. After the trade is cleared, then he can finally finalize the trade at IGX. So that's kind of thing we are thinking that we can have. But this time what happened that really prices had never been so high in power market side. So situations did not arise so that we could test something like this. So maybe we'll keep that in mind, and as soon as something comes up like this, people get interested in such contract, we will launch those contracts. So thanks Ajay and Vivek and all my friends who were part of this webinar. Thanks a lot.
And thank you, Gavra ji, Salim bhai, for your kind words. Thank you.
Thank you.
Sir,
Thank you, sir. Thank you so much.
Thank you.
Thank you.
Thank you for this webinar.
Thank you, Vivek ji. Thank you, Ajay sir. Thank you.
Thank you everyone for participating.
Thank you.